First, it's on your screen, and it's a good start for benchmark indices. It's a good start for benchmark indices. It's a decent start for Nifty. It's about 50 points higher for Nifty. Are we likely to go to 2000? Well, Reliance supported the market yesterday. The breadth is looking, I wouldn't say yo-yo, but it is looking formidable enough to make everybody look happy. And then you got a combination of Bajaj Finance, Sun Pharma, Tata Motors, and L&T, which is making the markets look, very stand out. D-Mart, big analyst meeting. They're sounding confident of demand making a comeback. Is that having an impact on the stock? No. The valuations are so stretched in a stock like Avenue Supermart that it just becomes this stock, a great business to buy, maybe at a bad price. But if you frankly ask me, the real man of the match based on early trends today, this is just like the first ball, but looks like Cipla is off to a good start, and the news is really helping it. And I never thought I will use the word, refer to Colgate again, but yes, Colgate numbers for the quarter gone by actually have been very strong. 5-star, 735, hello. Big move there. Another stock in focus. Numbers like Sharad told us on Saturday, but 735 for 5-star. What a cutout it's been for 5-star.
Oh yes, indeed. That has been one stock that has certainly been in the spotlight. But let's also get in a take as to which are some of the other newsmakers in today's trading session that the street will closely be eyeing. Tech Mahindra, of course, continues to remain on the radar, largely on the back of its quarterly earnings. It's been nothing short of a very disappointing set of numbers. Axis Bank as well, the overall profits have grown about 40%. You've got brokerages that continue to maintain a buy on an Axis Bank, so that continues to remain in the spotlight. Something like a Dr. Reddy's, a thumbs up overall. Very healthy set of numbers, beat on margins as well. And Cipla too, Aisha, will be a stock to watch out for.
Yeah, but I think the biggest newsmaker this morning has got to be M&M after that acquisition of 3.5% stake in RBL for 417 crore rupees. Look at the crack on this stock, and I don't recall the last time, at least in the last 2 years, that the stock may have fallen 4% in a single shot. 1483 on M&M is where it is currently at, and I think more than this 3.5% stake, perhaps what the market may not be liking is that they have actually categorically mentioned that they may actually consider raising stake in RBL Bank. So it wouldn't really stop at this 3.5% stake, and now sliding 4% for M&M. I think that's the newsmaker this morning. The slide on M&M is not getting arrested. It's falling more than 4% as we speak right now. Okay, Tech Mahindra is something that we've already talked about. Let's see what Axis Bank as well is up to. The NIMs are lowest in about 3 quarters. The operating profit has seen a decline sequentially for a second straight quarter. Mildly in the red for Axis as we speak right now. RVNL, what's that up to? Considering that the government is now looking at selling that 5.3% stake in the company via OFS, the floor price has been set at 119. 128 is what you're seeing right now on RVNL. REC, I want to check in on that also, because REC PFC, while they may be very actively traded off late, but REC numbers have not been anything disappointing, anything impressive rather, largely disappointing or hugely disappointing. The net interest margins have come in at an 8-year low. The NII is down 12%. So these are a couple of laggards in trade. But REC as a stock is not really seeing any damage this morning. Colgate, of course, is a stock that Nikunj highlighted. Cipla as well is something that he flagged off. DRL too, wherein the EBITDA has risen 20%. The numbers are, a great set across the board. DRL starts off with a 0.5% gain. Then, of course, there's, a couple of other names like a SIS, that is, a Syngene, there's Jindal Stainless as well. These two have come out with a decent set of numbers. But Kunal, what are the first trades that you're punching in? Anything on M&M?
Nothing on M&M as of now. We'll have to wait and watch how the prices settle up. But I think Gail is something which looks attractive. In fact, many of these PSU stocks, Gail, ONGC, NTPC, they are reconfirming breakouts for themselves. So Gail is something which I would look to trade in the open.
Right. Nuresh, what are the first trades that you're punching this morning?
So looking at a bounce back in Bandhan Bank, the stock has corrected quite a bit and started to making a reversal here. So keeping a stop loss at 214, expecting a bounce slowly towards 240 plus.
Well, it gives me great pleasure now to bring on board Jim Rogers to talk about what he makes of this world where there is not ready. He is getting ready or will be ready in some time. But Cipla is on a tear. The man of the match today clearly seems to be Cipla. 8% is not a small or a chotu move in a stock like Cipla. This is one stock where everybody in a sense had given up that when will they come back, how will they come back. But one quarter in a bull market, little bit of surprise will get magnified. In a bear market, little bit of disappointment will be blown up. That is the bull market for you. Talking in Cipla, where a little bit of surprise and the stock has just gone through the roof, 7.5% high. Jim Rogers, good morning. How you been doing, sir? So nice to have you back.
Well, I'm delighted to be here. Good morning to you. I will have to say to you that the Indian stock market has been the most surprising to me this year. We've done a very good job.
Well, I mean, I would love to say that we are the best, but if I look at what's the global equity setup, Nasdaq is also up, S&P has also participated. So yes, Indian markets are at an all-time high, but other major markets also are at a 52-week high.
Well, you just said it. Your markets are making new highs. That's very impressive to me. I would not have expected it. I would have expected that Japan would be strong this year, which is a bit of a surprise to many people, but India is the biggest surprise to me. Well done.
Why were you surprised and why were you not expecting that Indian markets will make a new high?
Well, most markets around the world have been strong, as you know, and when you're that strong, usually something happens to cause the markets to go down. I would expect the American markets to go down later this year, but anyway, I'm just surprised that India's been this strong. I did not know your economy was so strong, and I certainly did not expect your market to be so strong. Congratulations. Well done.
Jim, what do you make of the recent uptick which is coming back in commodities? Crude prices are up, rice prices at an all-time high. If I look at other basic commodities also, I mean, I don't know how closely you track it, but I can tell you that tomato prices in India, they've gone from about $1 to about $3.50. Is inflation threatening to make a comeback, especially in agri-commodity in the second half of this year?
Well, agriculture has been a disaster for a long time. We've discussed this before. So we're going to run out of farmers soon unless something happens. And the thing that always happens throughout history is prices go up, people become interested in agriculture again, and that's what's happening. Supply and demand get out of balance, but it's worse now because we don't even have enough farmers around the world.
So in this mismatch that we're seeing in agri commodities right now, Jim, what's the place to bet on within agri?
Well, as I look around the world, the cheapest asset class is commodities right now. I mean, sugar's way down from its historic highs. Silver's down over 50% from its all-time high. Those are certainly not bubble numbers, and commodities are the cheapest asset class. As I said, even the Indian stock market is making all-time highs. So nothing's cheap except commodities.
So Jim, at a time like this, what's your portfolio strategy? Where is it that you have exposure? Is it India? Is it some of the other emerging markets? Safe haven assets like gold and silver?
Well, I never use the word safe when I talk about investing. I have learned over the decades that nothing is safe. But India has, again, to repeat, has done a good job. I would say the Japanese stock market has still got a long way to go. The Japanese stock market is still down 25 or 30% from its all-time high, which is pretty remarkable. Chinese market is down a lot, so that may be a place to invest. But most stock markets have done extremely well in the last year, so there are not any bargains except maybe Japan, maybe China.
Jim, why has China surprisingly disappointed everybody? At the beginning of the year, the consensus view was go back to China. They are coming out of that COVID unlocking phase. Chinese demand will make a comeback, and if Chinese demand will make a comeback, commodities will also make a comeback. That view, I think, has got seriously challenged.
Well, China had a huge asset bubble, and always, no matter what the market, when you have a big asset bubble, and the Chinese bubble lasted several years, when you have a long bubble that pops, it usually takes a long time for it to recover. That seems to be what's happening in China now, because the bubble was gigantic. Beijing claimed that or said that they were trying to do something about it for several years. Somebody finally did something, but the results are going to take a long time to clear up because the bubble was so huge. America had a big bubble like this, in the 20s, and it led to the 1929 stock market collapse.
So what happens next now, Jim? I mean, the world in which you've invested in, it was about high debt is bad news, and if you have a high debt on your balance sheet, the future will look bleak. As a financial commentator, what I have reported and what I've learned from gurus like you is that countries when they expand their balance sheet, they will have to pay for it in future. But that theory, I think, is getting completely debunked when I look at US.
You have certainly learned a lot, haven't you? You've learned your lessons well. The biggest asset class in the U.S. has been technology. That has certainly been a bubble. If you look at the American stock market, it's up, but it's really only 7 or 8 stocks that are up, and they're technology stocks. They have gone up every day, and that usually leads to big problems eventually. I'm not selling short in the U.S., not yet anyway. I'm not selling short anywhere, but I can certainly see the technology bubble in the U.S. is getting bigger and bigger every week.
Jim, what makes you so bullish on the Japanese economy, though? Because inflation is a persistent problem there as well, and it continues at a higher rate than the national target that they have.
You're very perceptive. The thing that makes me bullish on Japan, the stock market, is the fact that the Japanese stock market went down by many percent, by over 50, went down 70%, 80%. It is still far below its all-time high. Its all-time high was nearly 35 years ago. So that's a long time. And now the Chinese central bank is buying ETFs. The Japanese central bank has more money than I do. And if they're going to buy equity or stock ETFs, I want to invest in Japan.
So if somebody has to look at the world the Jim Rogers way, what is your short, if somebody has to really understand the world the Jim Rogers way, what to your mind is the most overvalued asset class? What to your mind is the most undervalued asset class? And if Jim Rogers had to make one trade for next 5 years, only one trade, and then you are allowed to go to Miami or come to India for a nice vacation, which will be that trade?
Well, I guess that trade would be silver. Silver is so cheap on a historic basis, and inflation is not over yet. So I guess if I had to make one trade, it would be silver. The most overvalued asset class is probably U.S. technology stocks, because they're becoming absurd. I am not selling them as short yet because I expect them to get more absurd. The most undervalued asset class, probably agricultural commodities, maybe the Chinese stock market, probably agricultural commodities.
Okay, good to have you on board, Jim. Thanks much for joining in and sharing with us your outlook in terms of your portfolio allocation. Go ahead, go ahead.
I've got some silver here to show you I'm not just talking.
Okay, so you're staying true to your word. You practice what you preach, and there is your silver coin. Thanks so much, Jim,
Thank you.
for joining in. Okay, silver is the one trade that Jim Rogers would bet on, and of course he's very impressed by the India story. Commodities, he believes, is the cheapest asset class right now. Time to move right on then. Shree Cement, it's been steady volume growth in the quarter gone by. Realization growth in Q1 too has been strong. Neeraj Ankhuri, who is the managing director at Shree Cements, now joins us on the show to discuss the road ahead. Thank you so much for taking time out. Volumes in the first quarter have been pretty steady in line with street expectations. What's the outlook for the year ahead? Do you think that your volume growth will trend up, Neeraj?
Yes, good morning. So yeah, we do believe the cement industry demand growth will continue to grow very strongly, and that we are very well positioned to take advantage of this demand growth momentum. So what we have seen in quarter one, is what around those figures, at least a double-digit growth is what we would expect going forward in the year.
What will drive that double-digit growth then?
I would more put it in around 13 to 15% range for this year, 23-24. Yeah.
Okay. Neeraj, what I want to talk about is your realizations as well, because from what, we can see is that your realizations have been strong, a 3% sequential as against to about less than 0.5% for the industry. This has clearly been above the industry average realization growth, but is this a one-off or have you made some structural change to achieve this kind of a number?
I would not say, I would not go as far as that. I think it's more of a market mix issue, as well as the fact that we are focusing on some of our product lines which have a better realization. Largely it is a market mix issue for the quarter gone by.
When will the real benefits of low coal prices and coke prices kick in?
It will continue to seep in as we go forward, as I see. Quarter one, we have seen roughly about 10 to 12% lower fuel prices than what we saw last year, same period. Fuel prices continue to remain little subdued, though at this stage, I would also be very careful in my comments because these are volatile times and you never know how the fuel prices evolve in the coming days. But going by now, the last quarter, we were about 12% lower than last year, same quarter.
Neeraj, I also want to understand about pricing, right? Because while it's been a delayed monsoon, it's been a heavy monsoon as well already. And we understand that part of your price hikes actually had to be rolled back because it wasn't quite getting absorbed by the demand. And please correct me if I'm wrong here. How do you now see prices as well as realizations moving on?
So it's difficult for us to predict or give any concrete forecast on price evolution. It is not only a matter of demand growth, but also a matter of capacity utilization at the industry level. What we are seeing so far that prices have remained subdued, but going forward, as some of the raw material prices, including fly ash and slag, continue to be high, I expect stable prices, if not some increases in the coming quarters, but not in quarter two.
Can I encourage you to use this forum and give our viewers and your shareholders and everybody clarity on the whole issue of inspection and the charge of, tax invasion?
Absolutely. At this stage, it is what we do know and what we have already declared to the public is the fact that there has been a survey by income tax in our operations. It's not a search, just a survey. We are fully cooperating with the authorities. At this moment, we have not received any further guidance or directions from the authorities. We are very convinced that Shree remains a tax compliant company. We have not done anything which is in any way not in line with the law of the land. So that's how I would see it. And we should wait for the tax authorities to give the further directions.
So after that inspection, you've not had any communication from the tax authorities?
We are in continuous touch with them. There has been several levels of engagements with the tax authorities, and they have been asking us to clarify some of our claims in the past. And as I said, but we are absolutely convinced, and we have given our documents to substantiate our claim that we are a fully tax compliant company.
Is the amount of speculation really as high as 23,000 crore rupees?
Yeah, I think, ma'am, it has to be, you have used the right word. The word is speculation. Even if you look at our profit before taxes in last 10 years, they have not reached 23,000 crores. So if the PBT is not 23,000 crores, I do not know from where those numbers are emerging. But and as I said, at this stage, for me, it is enough to say that we are fully cooperating, and I'm sure this matter will be clarified very soon.
Uh, you'll appreciate our curiosity here because when the news came out, the stock actually went completely topsy-turvy. While we put the finest regards for Shree Cement as a company and have tracked the whole evolution of the stock becoming from 3-digit to 4-digit and 4-digit to 5-digit, it's brilliant what they've done. But perhaps if I could encourage you to share more clarity that what is the bone of contention? Why would the income tax department come out and make such a fat claim when you are confident that your books are clear? I mean, they say there is no smoke without fire.
No, I'm sure. There is no smoke without fire is the right way, but not necessarily the truth. I would not go as far. But as I said, it is the first time in our long history of existence that such a survey has been conducted. We have been strictly following the governance on tax compliance, and I have no reason to be worried about on this issue. And I would also urge our shareholders and everyone else, please be rest assured that Shree will adhere to highest levels of standards on tax compliance and governance.
When we speak to some of your peers and folks who understand the cement industry very well, they are of the view that the cement industry is on a brink of a massive consolidation. What we perhaps saw, let's say, in the steel sector. You've gone on record and have said that, look, you've been talking to smaller steel players in the past, cement players in the past. What happens to the scenario 3 to 5 years from now? Do you think 4 to 5 players would be left? That's it?
Too early to give such a forecast, that only 3 to 5 players will be balanced. I think there are very strong players in our industry. Even regional players are fairly strong with good governance, good management, good products, good overall management of the company. So it's not. There will be some of the members who may like to exit, but I'm also very convinced that we have very strong players in our industry, and they would like to continue to grow in this country. What we need to keep in mind that the demand growth in India is going to remain strong. India has just started building, and they are building large and building fast. So many players would like to invest and continue to grow in this. So I am not of the view personally that you will see a large-scale consolidation. But only times will tell how things evolve. Yeah.
Were you talking to Sangvi Cement? Were you in conversation? Has the deal fallen through?
No, we are not. We are not following up with Sanghi Cement. As I said, we have just announced a big capex of 7,000 crores to create about 12 million tons of organic capacity in India. And we believe that we have good arguments to continue to grow very strongly in an organic way.
Shree Cement has championed this whole thing of being one of the most efficient cost producers. That's really been the success of Shree Cement. Good innovation in energy consumption, logistics management. But there would be a threshold beyond which you would not be able to get more operational efficiency or cost efficiency. How will next 5 years or for 3 to 5 years work for you in terms of cost management, in terms of innovation, in terms of bringing the cost down?
Well, what you say is right. There is a growing sense of cost parity, and as the industry evolves and more new technologies come, there will be a cost parity. But at Shree, I think what you rightly said, there is this a sense of continuous ground level innovations that has been giving us cost advantages over the last so many years, and I believe that those innovations will continue. So. We have reasons to believe that while there will be a cost parity on many topics, but still there will be areas where Shree Cement will be able to manage operations more efficiently and remain the cost leader.
That's the other thing, right? Because Neeraj, all the expansion that you're talking about is going to come at a cost. How are you going to fund your capex?
So at this moment, it is largely through our internal accruals. Yeah. However, going forward, we are not totally averse to going for the debt market. We will also evaluate those options of raising capital. But what I see is a very strong cash flow. So even an amount of debt does not really create additional risk for us at this
Uh, to your mind, in next, let's say, 12 to 18 months, how do you see the cement pricing moving? Will it be differentiated all across India, or you see a linear trend?
No, I would not see a linear trend. Different states have and different regions have different dynamics in terms of demand growth or utilization levels and so on. So no, it is not. It's not going to be linear, but regions with higher utilization levels, regions with better demand growth, certainly should see a better pricing environment than those who are not.
What has changed because of Adani's entry into the cement sector?
Yeah, I think what we see is the companies are being very well managed, very well governed, and I think they also bring a lot of expertise from other parts of their business to cement, and overall it should do well for our industry to learn from what they bring on the table from their experience in other industries. Overall, I think it's good that a company of the repute of Adani's are in our industry, and that should really improve the industry the way we manage our supply chain, our fuel, our efficiencies, and everything. Yeah.
No evidence of any price war, because that's what markets were worried about, that here's a big player who's capable of disrupting the market. Is there any evidence of any price disruption?
No, I don't think so. Not at all. Not at all.
Okay.
Yeah.
Okay, final question. Over the years, I've tracked the cement industry. I've always seen that the capacity is at least 15 to 20% surplus more than the demand. Demand comes back, but cement companies, they keep on adding capacity, which is what you've also announced, a 7,000 crore capex. How is the supply-demand situation? Is it still surplus?
So the industry has been operating at about 70% or so. So it is different in different parts of the country. But 70% would be an average utilization level. I think going forward, I do believe that the demand will outstrip the supply. Supply growth is slightly lower than the demand growth, and therefore we should do again. It sounds like good for the industry.
Right. Okay, Neeraj, great to have you on the show today. Thank you so much for taking the time out.
Thank you.
Thank you so much. Let's just quickly revisit what the Shree Cement stock price as well is up to. A little muted, about 0.5% downtick is what you're seeing on that particular stock price. Where has the market settled in at? It was meant to be a very quiet start. Actually, it's not all that bad. We are once again marching up ahead. We're 91 points higher for the Nifty futures. So it's been pretty steady a day, and it's actually pharmaceuticals which is taking the charge, with Cipla up almost 8%. I don't recall, at least, when Cipla was up so much in just within the first half an hour of trade. There's Hindalco, Bajaj Finance, Bharti, L&T, Infosys, which are all seeing some decent move ups. Of course, on the other hand, there's Tech M as well as M&M. Both those stocks are a bit of a drag. But continue with earnings. Let me welcome on board the MD and CEO at PNB. We have Atul Kumar Gail joining in on the show right now. Atul, how morning? First off, want to talk about the loan growth, because the first quarter, seasonally a soft quarter, but Q1 loan growth has actually exceeded the guidance of about 12 to 13%. Would you therefore change your full year guidance?
As far as credit growth is concerned, we have given the guidance for 12 to 13%. Still, we will maintain our guidance, although we have achieved the growth more than 14%. And because why I'm saying why 12 to 30%, because some of the loan are in the short term in the nature, so we will maintain our earlier guidance also. And our RAM RAM will be the focus area for the growth because if you see the 40% growth in the retail, then around more than 9% in the agriculture, more than 5% in the MSME, and if you see the entire RAM, it is around 20%. So focus area will be remain in the RAM, and apart from the RAM, we will also focus on the quality advance in the corporate.
Mr. Goel, let me take a cue from that within loans. Retail book was growing at 40%, personal at 46%. Could you tell us what component is secured and what is unsecured?
As far as retail is concerned, they are having the three components. One is the housing loan, another is the vehicle loan, another is the gold loan also, the fourth is the personal loan. As far as housing loan, car loan, as well as the gold loan is concerned, they are fully secured. As far as personal loan is concerned, that is definitely unsecured, but I may tell you ki June 2022, the outstanding of this loan from the digital mode was only 58 crore rupees, and after that we have revamped our digital mode of the PAPL, pre-approved personal loan, and we have disbursed around 4,000 crore rupees in the last 1 year, and the outstanding is 3,600. It is behaving very well. Around 2 lakh customer has used this PAPL. It is available within 1 minute and 4 click only. The around 200 account owed is the NPA category where we are also recovering. So I think as far as unsecured in the personal loan is concerned, we don't have any worry as on date.
Right. You know, your fourth quarter OPEX was about an uptick of 50%, as we understand. And back then you had suggested that employee cost provisions were also made. This time your OPEX continues to be around that 7,000 crore rupee mark. Is this kind of a run rate something that we can continue or rather expect to continue?
OPEX में there is a two part. One is the employee core, other is the other operating expenses. If you see the other operating expenses, that they are in the same line. If you compare with the last quarter as well as the June 22 quarter. As far as employee is concerned, I may reiterate because from the November 2022, wage revision is due. So in the current quarter, we have provided around 283 crore rupees for the wage revision. In the March quarter also, we have provided the same amount. And the December quarter, we have provided for the 2 months. When we are providing the wage revision, so there is the impact of the pension revision also. The pension revision, we have also around 1,230 crore rupees we have provided as per the actual valuation under AS 15. But this is the reason of the increase in the AS 15 provision. It is based on the movement of the yield. If you see the March, the movement of the yield were from the 7.31 to 7.11 in the June. So there is a dip of around 20 basis points. The moment yield will increase, so AS 15 provision will be increased. So going forward, if rate remains unchanged, so I think the requirement of the 1,200 plus, which I have just told, it will be around only 400 crore rupees in the subsequent quarters.
So cost to income ratio, which was at 54.5, it has come down slightly. Where will it normalize eventually?
You are very much right. As I explained you, because if 1,200 is reduced to 3,400 based on the movement of the yield, so it should be around 51 to 52%.
Right, and your credit cost, which is at 2%, this, as we understand, is above your guided range. So can we expect it to taper down going into the second quarter or the second half, or will you maintain this guidance?
As far as full year is concerned, I still maintain whatever the guidance we have given, it will be within the range of 1.5 to 1.75 because on account of increase in the provision coverage ratio, which is around 90%, my aging provision for the NPA has reduced drastically. So for whole of the year, it will remain in the guidance given 1.5 to 1.75.
All right. So last time when we spoke to you, guided for a FY24 return on asset of about 0.5%. Your Q1 is at 0.3. What are the levers for you to take the return on ROA actually higher, return on asset higher?
We are confident and we are hopeful. As I just explained you, our credit cost, which is around 1.99% in the current quarter, is bound to reduce in the subsequent quarter. Moment the provision for the NPA will reduce in the coming quarter, profitability is bound to increase. So whatever we have told, it should be around 0.40. I think we are confident to achieve that. And profitability for whole of the year will be double what we have done in the last financial year.
Right. You along with other PSU bank heads have also met the finance minister. You've also met the RBI from time to time. Any specific concerns that they've addressed or spoken with you about?
Basically, when we are meeting the Honorable Finance Minister or the Governor RBI, basically they are reviewing how the performance of the different bank, and they are giving some of the guidance like compliance issue, the risk management part, cyber security part, and improvement in the quality, credit quality, as well as to make the higher provision in the good time. So this was the normally discussion in both the meetings.
Okay, and wanted to get in your view as some of your PSU peers, they have grown their corporate quite fast this quarter. Your growth in comparison is a bit more measured, and some banks are also suggesting mispricing in corporate. How should one look at that from your perspective?
As far as corporate is concerned, as on date also, I am having the sanction amount of 1 lakh crore in hand, which will be disbursed in times to come. Because as you have told also, it is a price war basically. So we are giving the rate as per our own choice, whether they avail or not avail. The moment they will come to our pricing also, so I think we will be in a position to release the 1 lakh crore. So growth in the corporate will also increase, and most of the corporate who were not utilizing the working capital limit, now they have started utilizing the working capital limit, and some of the corporate they are coming for the expansion plan like in the cement industry and the steel industry. So corporate financing will also bound to increase in the times to come.
Really appreciate your time. Let's go across to Sumit Chaturvedi now from ET Now. He's got more details on this entire Pratt and Whitney engine re-examination issue. This is an ongoing story. How will this have impact on Indigo's balance sheet and for commuters and for airfares? Sumit, what is the very latest? Can you break the flashes for our viewers?
So sources have told us that around 3 to 5 additional aircraft now they'll be grounded because of this recent Pratt and Whitney issue. Overall, 11 aircraft have been identified, but 6 are already grounded of the shortage of parts. So 5 additional aircraft will have to be grounded now for the lack of this issue, for the lack of problems in because of the problems in Pratt and Whitney engines, which have been recalled globally. On Tuesday, Pratt & Whitney parent company, it announced that there are issues coming in the engines for which the engines will be recalled globally. Go First, we have already seen that it has seen the problems arising with engines, but now Indigo is also getting problems with these engines, and 5 aircraft additional from the current grounding will be grounded now. That's what the sources have told us on this issue. So it's coming as far as the airfares are concerned when Indigo was trying to gain market share in absence of Go First. So 5 aircraft will be kind of a small loss for Indigo as far as the fleet is concerned.
Sumit, so just to clarify, this is in addition with the Tuesday warning from Pratt & Whitney where they said that 1,200 to 1,300 engines might have to be removed for inspection, right?
Absolutely, but that was the global numbers. In India, now we are getting a clarity that Indigo is getting impacted because of this issue, and 5 additional aircraft which were flying will be grounded now. Additionally, 6 have already been grounded. They were already grounded because of lack of parts. They were already not flying, but 5 additional aircraft will be now grounded for this recent issue, which came up on Tuesday, Pratt & Whitney's global recall.
I don't track Indigo the way you do, but what is the total significance of Indigo for this? I mean, if 11 aircrafts they go, if they're grounded, of the total fleet size, will that be less than 10%?
Absolutely. If we say around 137 aircraft, A320neo aircraft are being flown by Indigo, it's a small number when it compares to the whole overall size of the fleet of Indigo. But it's coming at a time when these issues are coming very frequently. It's also coming at a time when Indigo is facing challenges as far as crew is concerned. So any small problem off the plane is a problem for Indigo. But it's the coming season is not, thankfully, a very holiday intensive season. It's a season which is generally considered a lean season. Indigo can try to lease the aircraft from overseas and try to fly these aircraft. But looking at the way Pratt & Whitney has cost Go First its whole business, this can be a serious issue because already many aircraft are grounded from Indigo, and these 5 additional, no one knows when they will be flying back again.
Yeah, well, absolutely. Considering that this is the lean season and the fact that it's raining the way it is pretty much across the country, even if Pratt and Whitney were to find any fault in these 10 A320 news for Interglobe Aviation, I'm sure they can manage that within their existing fleet. But Sumit, thanks so much for really clarifying what this really means for Indigo. And this is less than 10% of their fleet, as Sumit is just about clarifying. But let's stick it with earnings and let's keep it with that. We've got Praj as well, which came out with its numbers. So let's address that. Remember, the revenue has come in lower on a sequential basis for them by about 27%. EBITDA as well has seen a bit of a slip, and so has PAT. So let's try and understand what went by with this quarter and what's the visibility going forward. We have with us the CEO and MD, Shishir Joshipura, joining in on the show right now. Shishir, hi, good morning. Good to have you on ET Now. Thank you so much for taking your time out. You know, Shishir, before we address your earnings, I'd like to first talk about, this suspension of rice supply for ethanol. Is there any implication for you at Praj?
Well, we have been speaking to our customers, and the way the rice for ethanol is used is that customers source it both from open market, and a few customers do source it from FCI. So this order will definitely mean that they have to rearrange their supply chains, and I think that could mean a very short-term temporary blip in their plans to start their productions or run their on-running plants. So we do expect that there will be some very short-term impact, but as the supply chains realign themselves in the new rice season, life will become normal again.
Okay. Let me now come to earnings then. Although your order intake has risen and your order book position has strengthened sequentially, the revenues booked have seen a dip, also below what the street was anticipating as well. Why this mismatch in execution?
Well, actually, what happens in a project nature of business is that sometimes the order inflow may have a differentiated delivery cycles from the customers and given their own project compulsions, and that's what we saw in this quarter. And as we go through the year also, we are seeing our order book execution that the second half is going to be far more loaded compared to the first half. So we are not taken by any surprise. The important dimension for us was two things. One, are we able to grow our order book, which we have done? And the second was, are we able to manage our margins? And that too we have done. So those are the two key parameters for us. If we had slipped on that, then I would be worried. This is just a time shift, not even a shift, it's just a time, prioritization of the project that has resulted into this lower revenue this quarter.
Sure, relief to hear that. So could you put some numbers into that? I mean, how much revenue growth can we expect for the rest of the year? Because last year was about 3,000 crores. You think a 4,000 crore rupee figure is achievable?
Well, while I may not be able to give you an exact number, sure, owing to our company policy, we are confident that we are remaining on our growth path and we are not concerned about it.
There seems to be a sudden change by the government in terms of what ethanol producers would do in terms of the supply of rice. I'm talking about the grain-based, companies here. When policies of like this and ad hoc policy changes are done, do you think this, in a sense, could have an impact on the ethanol industry? It will have indirect impact on a company like Praj?
Well, let's look at it like this. The government is fully committed to the EBP20 program, and there is absolutely no taking back from that. The ethanol production in the country comes from different feedstocks. Sugary feedstocks, starchy feedstock. Within starchy, there is spoiled rice, spoiled grain, broken rice, and full rice, and maize. So the full rice, which is the FCI, and within full rice, again, some comes from FCI and a majority comes from open market. So a very small fraction of the overall supply chain needs to get realigned itself. So I don't think there is any, step back in terms of either the program or the requirement or the demand of ethanol as we go forward. We strongly believe that the government is fully committed to BP20 and the industry is gearing up to supply to that volume.
I am looking at a very important matrix which shareholders always look at, analysts always look at, ROCE. In March 2020, it was 11. In March 2023, it was 31. There is a huge improvement in your ROCE. Given the volatility in the order book where you're confident of making a comeback, what happens to your ROE, your ROS trajectory?
I think we are very confident that we'll continue to perform on the key metrics of business performance. We have also talked about the fact that as we move through, and I'm not talking one quarter, as we move through, let us say the next 6 or 8 quarters, we will see an increasing share of business coming from our export business, an increasing share of business coming from energy transition and climate action programs. So we will see a change in the nature of our order book, all in the positively accruing side of the margins, on the margin side, and therefore we are very, very confident and very excitedly looking forward to a future that we are trying to build here.
You have, time and again reinvented the technology, and I'm talking about, let's say, from grain to other new platforms which you just mentioned, even in terms of climate, a product category, a category in which you, in a sense, have come up with some innovations. How much the new business category will be the percentage contributor for Praj's top line and bottom line in 3 years from now?
Well, the way we are looking at it is like this. We clearly see, we know that EBP 20 program will have to then see other policy initiatives unfold. For example, do we go to E27 the way Brazil has gone? Is there a diesel blending program coming forth? There's flex fuel vehicles on the anvil. There is ethanol-based chemicals. So there are a whole host of avenues that are likely to open up in near future. We also see that it's not going to be only an ethanol story. It's also going to be, we are going to see a clear forward advent of CBG, as we call it in India, or RNG worldwide. We will see SAF walking in a 2 to 3 years time period. So there is going to be multiple avenues of growth that will open up. It's no longer just single feedstock, single output kind of a market for or a canvas for us. We have multiple feedstocks and we have multiple outputs. And as you rightly said, we are focused on developing our technological solutions for all these fields as we move forward.
So last 3 years have been great for Praj. Next 3 years, will they be equally exciting, or there could be a base effect?
Well, that's what we are working on to keep the story exciting and equally challenging and running. Time will tell whether we are successful or not, but that's the attempt of the team.
Which we look at a macro level is the capacity utilization for the industry. And if the capacity utilization numbers, they reach 75 to 80%, that's the time corporate India, they start capex again. In your understanding, in the clients whom you interact with, what is the capacity utilization numbers they have? Because that could be a lead indicator for all of us to understand that how your future order book will move.
Well, if you look at it, the way we have seen this industry operate, because there's some seasonality factor also in the ethanol, especially in the ethanol production. So in that particular segment, we have seen that on an average, the country, if you look at a country basis, we are looking at a 60-65% of the capacity utilization that takes place and the capacity starts to get built. As I was mentioning to you, there are different levers that are going to drive our business forward. Energy transition and climate action is one very big unfolding canvas story around green hydrogen, green ammonia, the LNG space. We are going to see a whole host of opportunities that will open up there. So as I was mentioning too, we should not just worry about one dimension of ethanol, which of course is a very good story building and will continue to build on different dimensions. But also the other dimensions will walk in, especially from companies that are located outside India.
You know, the other thing I also wanted to understand, Shishir, is that 35% of your order intake was actually from the export market. Tell me how the export environment has been and whether this 35 actually can scale up higher.
Well, this is precisely the point I was trying to make, that if you look at, say, the previous 4 quarters, this number would be hovering at about 18-20%. And we have seen a shift now taking place in terms of it moving up to 35%. And as I was mentioning, on a yearly basis, we are clearly seeing a shift in favor of increasing share of international business in our overall pie. And that is coming from this whole phenomenon of ETCA, as I was mentioning. And we can see a very healthy pipeline build-up. The low carbon ethanol opportunity in several markets like United States and Brazil, in Europe, we clearly see that ethanol, ETCA will become 2 big drivers for our business, for our international business.
So how are you planning to utilize your free cash flow? What you're telling me is your business does not need too much of cash. It throws up a lot of cash. If you are looking at this kind of a strong growth, the FCF, which is free cash flow generation, I'm assuming it will increase. What is the plan for that? Buyback, dividend?
Well, whether buyback or dividends is a matter for the board to discuss and decide. So that's not for me to comment. But what is important to understand is that in our business, as you were mentioning earlier, we need to continuously invest into technology development. We need to make sure that we have the capacity to serve our customers. We've just announced a very big capex plan last quarter. So we'll have to see a judicious utilization of our cash. And I'm sure the board will take a wise decision on what to do if we do have additional cash flow, and that's how we intend to continue to operate as well.
I want to go back to that whole, debate of return on equity ROS from 12-13% to 30%. I mean, that is a fantastic number. And this 30% number, I think, is way above your long-term average. Your long-term average is in mid-teens and early 20s. Eventually, where do you think your return on ROS will actually settle?
Well, I do not know whether I can give you a precise number on where it will settle, but what we have done is that as we leveraged the high volume growth that we have witnessed over the last 2 years, as you mentioned, we also created a strategy to how we will serve our customers, because eventually we have to deliver our solutions in form of equipments and plants and systems. And how do we go about, making sure that whatever capital we have deployed is used most efficiently. And the model that we have worked out for execution was with this thought process in mind, where it was possible for us to do a lower capital employment and leverage it to a very, very large extent. In our ETCA business, where what I was mentioning to earlier, we may not have that much of freedom available. We'll have to invest, and that's what we announced, 100 crore investment into a new facility in Mangalore. That's where we have to put that money and then ensure the return. Also, we have worked very diligently on ensuring that our capital usage becomes very, very efficient through tightening of our operations.
I was hoping for a slightly direct answer. All I'm trying to understand is that there is a volatility in your return on equity, a number which shareholders look at, ROCE, return ROS has been volatile. 18% in March 2012, as low as 6% in March 2018, as high as 31% in March 2023. What would be the long-term average at will it will settle in next 2-3 years? It's a simple, straightforward question.
Well, in 2-3 years, I would expect it to be range bound to what we currently are.
Current level is 20 plus.
Definitely, yes.
Okay. So you expect your return on equity, ROC, to stay between 20 to 25% for next 2-3 years.
That's right.
Okay. Appreciate your time. You've been very candid, you've been very frank, and you've been very honest in fielding all our questions. Hope to see much more of you going forward. And thank you for joining us.
Thank you very much.
There's a new listing and it's a bumper listing. These days it takes 3 days for a company to list, and NetWeb is off to a great start.
Great start is putting it mildly. Nikunj, the issue price was at about 500 rupees per share. This has been a pretty stupendous listing, to just put it mildly. Remember, the company is into high-end computing solutions, and the expectation was that, it would be a pretty stellar listing. There were very strong subscription numbers, very healthy financials. Their overall operating margins as well had been good. They're very specialized in a niche segment of high-end computing solutions, which is why, we were going in with high expectations. But this is nothing short of a pretty stellar debut. That is NetWeb Technologies. Tell you what, we'll slip into a very quick break with news that the index is at 19,800. Come right back for more on the other side.